Hey guys, this is a market update. We're actually in a holding pattern for Bitcoin right now, which is what Bitcoin does most of the time. But I'll show you some data around this and what I think will be happening over the short and longer term. So firstly, for the short term, look, a 7% drawdown from the all-time high. It's really in no man's land, right? For this bull market, we've had kind of regular 20% drawdowns at least from the all-time high. That would be a decent area to get in. So I've got some short-term positions open. I don't really want to add to them right now. You can see that we're trying to turn this resistance into support. But there's so much going on in the world. You've got the big, beautiful bill that they're trying to pass in the States. Trump wants to get that done by July 4th. Are they going to let him do it? Are they going to have to push it out towards the end of the year? Right, and so there's just so much uncertainty. And so a 7% drawdown isn't really the best. Now, I've got some short-term positions on. I want to add to them if we draw down further, maybe to this green box. A 15% drawdown, considering Bitcoin has drawn down 20-odd%, is a much better area to maybe try and pick some up and then wait for the next kind of bounce upwards, which I think will happen. But we're in no man's land, right? Maybe we don't come down this far and we actually just bounce up into new all-time highs again. And then you can actually just wait for maybe potential breakouts there as well to actually trade. So we're kind of in no man's land. That's for the short term anyway. But for the long term, I'm buying all the time, trying to dollar cost average as much as I can. Because actually, if you look at where we are in the longer term cycle, I still think there's a long way to go. If you do trade, Bybit deposit bonus down below. Click the link below, sign up, make a deposit. They'll give you a deposit bonus to trade with. Whatever you deposit, they'll give you a bonus all the way up to $30,000. If you're focusing on the slightly longer term here, I'm still buying here. I still think we have a long way to go. My target for this bull market is this red box right here, which is anywhere from 150 to 250, something like that. This is the chart of truth. If you're in the crypto course, just message me in the Discord group and I will give you this chart, right? So this is kind of my analysis of Bitcoin over the very long term, where we have bull markets and bear markets, right? And then we have a kind of trend rate over time of the growth of the asset. And so, yeah, this orange line here is kind of the mid-level, right? The actual trend rate. And so we're above it because we're in a bull market. But Bitcoin usually goes way above it and tops out nearer this blue line. Now, this blue line is tapering off as the trend rate of growth of Bitcoin does slow over time, right? But that's taken into account. This red box, would be a typical bull market for Bitcoin. So we're nowhere near that yet, but we're ranging into it. And this bull market is very simple. You just have way more buyers coming from Strategy and the other institutions, and they are finding Bitcoin. There's not enough Bitcoin to buy from mining supply, and so they're buying it from existing holders. So what do you do when you want to buy something from an existing holder? You have to just keep ratcheting up the price and finding those pockets of sellers. And that's what's been happening, right? It went up to 45K, then 70K, right, then 100K. You're just finding those sellers and saying, well, the sellers are exhausted here, let's go up to the next level. So for the longer term, I'm still bullish, I'm still buying. I'm really buying all the time. It's just up here, if Bitcoin gets up, right up here, that's when you can start saying to yourself, do I want to wait a little bit? Do I want to pull back? Do I just want to not buy so much? Because Bitcoin doesn't usually stay up here for that long, right? It usually comes up, there's a kind of peak and a spike, maybe it draws down again. If it draws down, start buying again. But if you're right up at the top, that's when you want to be careful. But you can really easily see that. If you look down at the RSI here, right, just go to indicators, right? It's just normal RSI, right? This one right here, relative strength index, this one. You can see when the market's overdone, right? So when the market goes above 70, that's usually a peak for BTC, where if the market is a little bit overdone, it's going to pull back a little bit. So you can wait for those, especially up here. You want to be waiting. You don't want to be kind of buying these breakouts. Now, down at the bottom of bull market, you can buy breakouts, no problem, because the price is low. But when the price is high and the relative strength index is high, that's kind of toppy, right, when the price is up here at the top of a bull market. If you look at funding rates as well, funding rates right now are very, very low. This is leverage in the system, essentially. So funding rates are very low, meaning leverage is very low. And that's good at this price, right? So I'm happy to buy here. The market is just ranging and finding its price here. If you look when funding rates are high, so around October, November in 2024, that was this big spike here. So you had a huge spike up, RSI spiked up, and that means eventually the market has to cool down again, right? And so it did cool down, and then you get that drawdown. But from right now, right, RSI is, just in the normal range. Bitcoin's 100K. Funding isn't too overdone. If you look at this as well, this is a liquidity risk score from GMI. This is from Jamie Coots. It's at 3, right? So when risk score is very high as well, around 5, and you can see that it got to a 5 during these spikes and the price rises here, and then this one here, 5. Everything's a bit overdone, right? The price is high, leverage is high, liquidity risk score is high. Right now, we're just soft. Everything's soft. Nothing's peaking. RSI isn't peaking. Liquidity score isn't peaking. Funding rates aren't peaking. We're at 100K, right? So you're just seeing the market accepting this kind of 100K level. That's good for spot. It means that the market is good up here and there are buyers up here willing to pay, and eventually those spot sellers are going to be found out, and I think we do go higher, right? You just have to worry about right now, as we do move higher, buying when everything's spiking. So if you see funding rate spiking, this is CoinGlass, by the way, so go to CoinGlass and then go to funding rate up at the top, and then just find funding rate heat map. You can see this for yourself, right? So when everything is fine and ranging, you just keep buying dollar cost averaging. Only when you get these huge explosions where the price is going up and leverage is high and everything else, then you can, I think, start to maybe pull back a little bit and wait, especially when we're up at higher prices. If that happened at the bottom of a bear market, so if we're at a bear market, Bitcoin's 20K, right, and you're seeing funding, go up a little bit, RSI is going up, everything is showing a bit of an expansion, it's not a big deal, right? Because the nominal price is low, right? But when the price is getting higher and higher, that's when those are warning signs, right? When you see price is high after a bull market, leverage high, etc., that's when you start to get worried. But we're not there, right? I just think we're in a really good spot, and I just think we can go much, much higher before worrying about that stuff. And this is my target here, right? This is my target, 150 to 250, something like that. We're in a major cutting cycle worldwide. Look at all of these central banks and what they're doing. These are decreases in interest rates. Major worldwide coordinated rate cutting cycle. That's not because GDP is too high and inflation is too high, right? They cut rates because GDP and inflation is too low, and they need to up the price level again, right, to inflate the system again. Even the US are cutting. I know that they're probably way too high right now. Most people think that. 4.5% on the short end, almost, and your inflation is 2.5%. And you're trying to increase the price level to inflate away your debt, because debt is the third highest outlay. And every percentage point higher is costing you over $300 billion in interest. If you just cut the rates, that wouldn't be there when you can refinance. Look, there may be, it's too late Powell, right? Too late Powell, he's already decided he wants to push it out. And so that's just what he's going to do. And their rates will be a bit higher, but they are in a cutting cycle and they will be cutting. Even the Fed, their dot plots, and that's not trustworthy anyway, but even they're looking at 2 cuts before the end of the year. So if they're projecting 2 cuts, it will probably be more than that, because they don't want to let go that they're going to cut more than that. If they say to everyone, yeah, we'll probably cut 3, 4, 5 times, right, then the market just prices that in immediately. So they have to go and lie and say, no, we're going to cut 2 times. We think inflation is going higher, even when they don't think inflation is going higher, because they have to manipulate behavior now. If they just tell us inflation's fine, we're going to cut like 3, 4 times, then the market prices it in and you get too overdone, right? So I get the game that they're playing, and that's fine, but we don't believe what they say because what they say isn't true, right? It's just a manipulation of our behavior now. They say they're going to cut 2 times. They're probably going to cut more than that. You can see that inflation rates are coming way down. So that's the bull market, right? The end of the bull market is, look, too late Powell's going to wait and wait, but he's eventually going to cut probably more than they say that they're going to cut right now, and then markets go higher. This as well, the game here is to get as much currency as you can into the treasury market to actually make that thing liquid, so the government can keep refinancing its debts, keep running these deficits, assets go higher with all of this. So this is now past the supplementary leverage ratio. This is cutting the ratio, which should free up more capital from banks to put into the treasury market. And that's why they also passed the Genius bill this week, which is a stablecoin bill. They want money for the deficits. And as long as they keep running and that continues, then asset prices go higher because more currency, right? And that pushes asset prices up. So if you trade, the Bybit deposit bonus is down below. Click that, deposit. Whatever you deposit, they'll give you a deposit bonus to go ahead and trade with. The crypto course is also linked below. 300 videos, and you can ask me questions in the Discord groups as well. I'm James, this is ManZG. Cheers for watching, and I'll see you in the next one.